All right, my good people. Hope you've had your very good understanding of my textbook explanation. Now we are moving into the chart. You know, the chart is not ideal. The chart is a representation of what is happening in real life in the market, what the big players, the institutional traders, you and I, the retail traders are doing, sentiment and all of that. So it's going to be a little bit different from textbook, but ideal situation. We use the ideal situation to be able to understand the real situation you get. So since you have been able to understand the ideal situation, calm your head down, drink some water, relax, don't be scared. Go through this for the first time. If you don't get it, go through it for the second time. The video is with you. Play it until you understand it. All right. So first of all, look by the left side of the chart. You discover the first guy I was using as an example. All right. So when we call this the high, pay rapt attention because I don't think I really need to start labeling. But okay, let me just label a few. All right. So I'll call it the high. High. All right. So let me move this guy to that point. All right, this is the high. Okay, then you see as it came down to form a low, we can call it what? The low. All right, it's called the low of the market. All right, so you can have it here, low represented with L. All right, you can see how it went up again to this point, sorry, to this point. All right, can call it was the lower high. Just remember, refer to the previous class. All right, so lower high. Then again, somebody would have called this a lower high, which is correct, but we have this low. That's why I'm telling you when you come to a textbook is not always the same. But in as much as this low is yeah, in as much as this high is less than this previous high, this is still lower high. All right, this is still lower high, lower high. You get to understand this better with time. This is still lower high. Now, if you want to label this, you can skip it. You can skip it since this low is higher than this. There's no point writing higher low. You can skip it. Then go straight to this point, which is what, and say what, lower high, lower low, sorry, and say lower low. All right. The reason why the nothing is still changed, nothing spoiled here is because it's already a downtrend, and as long as this high is less than this high, we still maintain a downward movement, even though this low is less than is not lower than this. It can happen sometimes. It's just price action. All right. So with time, you get to understand this. That is why market is not textbook. Okay. Yeah. Just follow it step by step. You understand it. So this is what lower low you get. So this is lower low, lower low. All right. And this one again, because this high, market made a swing high. Like I said, we call them swing high, swing low. All right. Because this high is what is less than this high, we also call it lower high in reference to this previous lower high. So it's what? Lower high. All right. Yeah. And I'll stop labeling from here. Just listen attentively. So we have this area again. We have this area, all right, called the low. The market made a swing. You can call this lower high. All right. This eventually broke it, and then since they are both together, you can also call this lower high. Yeah, you can still call this lower high, or you can call it a high. When you refer it to this, you can just call it a high. All right, but then we still continued in the downward direction by breaking this low. All right, so we had a lower low here. We had a lower low which broke this previous low. You can see the wick taking it out, and then we had this again, um low, the swing low coming down again. So is what? Lower low. Okay, let me repeat this place again. Now, when you see areas like this, there's something we do as traders. When areas of higher low and lower high are together, there's what you do in order for you not to confuse yourself. You see this place that is like this, just draw an arrow to this point. All right, meaning you are covering up from here to here. So you can easily call this place, you can easily call this place a lower low. Are you getting? You can easily call this place a lower low. When you see any chart pattern like this, you can easily call this a lower low, and then you take your arrow down. All right, so it's now looking like the textbook example. Okay, so that you can call this what? A lower low as well. So this becomes a lower high. You can see that when you do it this way, you have been able to eliminate the confusion that is there. All right, you have been able to eliminate the confusion that is there. So you can see now. The same thing applies to this guy. Now, instead of you instead of you to instead of you to start labeling this guy, seeing the fact that this guy made a low here, so for you not to get confused, you can just drag it down. All right, just when after going up from here to this point. All right, you can just drag it down, make this swing, and then all of that. So that is basically what it is. That is it. So, and you can decide to remove this anytime you do it. um Anytime you see those kind of area, just use your arrow and do it that way, so that it's telling you that okay, this place is congested, they are together, so let me just take everything at once. You get the point? Yeah. And then here you have a low, all right, which is lower than this, so you call it what? Lower low. And then here you can see where you have something like this again, like a high and this, but then continues because it's together. You can also use your arrow to just cover it up, to this point, so you don't get confused, and then you call this place lower high because it's lower than this area. And then going again, you can see this. So instead of you to get confused again, you can just use this to take it down. All right, take it down at once. All right, ignoring this area, because ignoring it, although when trading smart money concepts, will start identifying those areas, but for now, to get your market structure, you don't need them. So yeah, that's it. And you can see how neatly, if I should even use the arrow, let me use the path to draw. If I should use it, you can see how let me use this guy. Oh, okay, no problem. And see how we kept going, we kept going, we kept going. It's now looking like the textbook example. Now that you are starting and you are practicing, you can be doing it this way. All right, when you are doing it this way, you are beginning to understand perspective of things. You see, went down, went up, did this, did that. So it's now looking like the textbook example. So as a smart student that you are, you can see that this place did something and they are together. So you can easily uh easily do something like this coming. You can easily drag this guy to the lowest one, to the lowest point, and then you get another one, then you get another one to this point. So when you see something like this now, you can see how you have been able to easily do it so that it will not confuse you anymore. So you can see your lower lows are neatly drawn, and then you can see the same thing we did in the textbook example is beginning to appear on the chart, even though the chart is a real life scenario, which is not an ideal, but we are using the ideal situation to represent a real life situation so that we can understand it, because without that, we will not be able to understand it. All right. So you can see, I believe this is very much explanatory. If you are getting confused, pause the video, drink some water, relax, walk around, come back again, and you know start consuming the information again. You will definitely get it. At least play it twice or three times. At most, the third time you will understand it. You can see it's easy. You can call this place your lower low, your lower high, your lower low, your lower high, your lower low, your lower high, and so on and so forth. And then we now come towards uh, what I told you about price breaking structure. So if you look at this one now, you can see how, just go back to that place I said this is screenshot. That's textbook example. You can see that we have been able to represent the textbook around here. So you can see that if we take this arrow from bottom to top, we obviously have broken structure, just exactly. So you can see a very neat um, structural break that we have here. Right, so you can see it. So instead of price to trade below this high, price traded above it. And once this happens, we say that we are changing the trend. So we are now going forward the bullish trend. So relax, walk around, and let's continue for the uptrend. Okay. So my good people, haven't seen uh, our downtrend, haven't understood it. I believe you have understood it. If you've not, go back, start this video afresh again, understand before coming for the uptrend. All right. Now the uptrend is just the opposite side of the coin. It's that simple. So like I've already said, just identify the better swing areas. So let me just take it as the textbook example that we have already done. All right, so this one I won't really waste a lot of time, because understanding the downtrend means you've understood the uptrend. So look at, I'll just take, instead of me to be doing all this little swing, I'll just go straight to this area. All right, go straight to this point from bottom to the top, most top. All right, so this is the bottom, so this is the topmost top. All right, no, this is higher, then this is lower. Like I said, instead of you to be doing labeling this one separate and this one separate, since they are very together and close by, just do it once. All right, so look at this area, look at this bottom, look at this, look at this bottom, and that's how we continue. All right, that's it. So if you look, you can see, coming from the textbook example that we did in the previous class, so you can see how this took out this guy. So whenever um whenever the high, instead of it to be lower than this previous one so that we can continue moving down, it became higher. All right, all of a sudden, remember we are coming from a downtrend, so it became higher than the previous high all of a sudden. So we are now expecting price to keep going up. So as long as we have broken to the upside, we are now like, okay, price has started buying, but you don't start buying from here. You wait for it to come back to a discount zone where you can now start buying. All right, and most of the time you probably may not buy from here. You can still wait for it to break again for the second time, like here. Then when it comes back down, you continue. So depending, but I will show us different techniques. By the time we have a very good understanding, we can still use from the very first break to start. But as a basic SMC trader, it's very good that you wait for the second break, because the second break guarantees that yes, price has actually reversed to the upside. So we have first break of structure, second break of structure. Yeah. So but by the time you get to the advanced level of SMC, then you'll be able to identify price around this area and be able to trade. Me personally, looking at this area, I'm already seeing the reason why price rejected off of this area and started going up. So which is what you learn as an advanced SMC trader. But it's step by step. You can't take in everything. So it's take your time, learn, understand, study the charts, work on it step by step, and then you will eventually get to maneuver these things. All right. Don't let the chart confuse you. Anytime you come to the charts, try to use this thing to represent your break of structure so that you don't get confused. So by the time you do it this way, you easily know what's going on in the chart and know what you are expecting to do. All right. So this is it. So now you can label this place. You can label this place your low, label this place your high. This is what your higher low. Remember from the textbook example I did, your higher low. This is your higher high, your higher low, your higher high, your higher low, your higher high, your higher low, your higher high, your higher low. All right. And this is it. So in case you want to do it yourself, do it as an assignment, study. So I'll advise you, don't just watch this video and keep it. After watching this video, go to the chart, identify this thing, plot it by yourself, plot it by yourself. After plotting it by yourself, label it, your label your low, label your high, label your higher low, label it properly, both for the uptrend and downtrend. Identify it, go to maybe 2 or 3 different charts, identify it. All right, and then make sure that you have understood it. Once you are able to do that, um from the example that I did for the downtrend that I labeled, use it to compare your own if it's looking the same way. Also with the textbook example that I gave, I said you should screenshot, use it to compare your own if it's the same, if it's looking alike. I say in this market is all similar, look alike. So it mustn't be exactly, but as long as it's giving you the high, the low, the higher, the high, the higher low, and all of that, then you are correct. So ensure to understand this part that I said. Go for the lowest part, go for the highest part, go for the lowest part, go for the highest part. Don't get it twisted, don't confuse yourself. All right, thank you and God bless you. So the next video will be about the sideway markets. All right, the sideway markets, you just need to see how it looks in the in the market, but you are not advised to trade sideway markets. So just for you to know how it looks like, so that whenever you come to the market, you are not seeing a trend, which I say the downtrend that we have treated and this uptrend that we just treated. If you are not seeing any of those two, then you should run away and come back later. All right, so the next video we are going to treat it and then moving forward. Thank you for being with me. Bye for now.